Ray Dalio is one of the most influential investors in the world today. He started his company Bridgewater out of his two-bedroom apartment in New York City in 1975 and has grown it into the world's largest hedge fund. Dalio is the author of the New York Times #1 bestseller, Principles, Life and Work, in which he shares a blueprint for success, personal and professional. Dalio is an active philanthropist and conservationist, with a special interest in ocean exploration and conservation.
I'm pleased to bring in our next guest, Ray Dalio, the founder of Bridgewater Associates, the world's largest and most profitable hedge fund firm. Ray is also a well-known philanthropist and an author of multiple books. Ray, it's great to have you with us.
So nice to be here.
So I mentioned at the top that you're an author of multiple books, and I know that you're writing one now called The Changing World Order, and you've been talking about three forces at play that were here pre-pandemic. Would love for you to share your worldview with our viewers and listeners.
I do research, and so this is a study that I've been doing, and then I decided to share it with people because I think it's so important. A number of years ago, first with 2008, we got into a monetary situation, of course, where we're printing money, creating a lot of debt, and monetizing it. And then populism emerged around the world. And President Trump, who was more of a populist, emerged. And it affected tax policy. It affected markets in a lot of different ways. And that led me to realize that there are three big things that are going on in the world that are dominant. And then COVID came along. Those three forces are, first, the long-term debt and monetary cycle, which I mean the creating a lot of debt, monetizing it, and the implications of that, which reverberate through the system in terms of all the markets and everything. The second is this conflict, this polarization, this wealth gap, and how we're at each other's throats. And I looked at the wealth gap, and I looked at a lot of measures of conflict going back in time, and I found that they were in the 1930 to 45 period. The printing of money, as I described, and debt monetization was also in the 1930 to 45 period. And the third big influence is the rise of China. So the rise of a great power, challenging an existing great power, the United States. And that has enormous implications. As an investor, I think, what are the relative appeals of the markets, but it has a lot of implications. It's not just a trade war. So the markets and everything were reverberating the trade war, the technology war, the geopolitical war in Taiwan and the South China Seas, and then also the capital war. We're seeing that emerge. So those three factors required me to then go back in history. And I wanted to study the rises and declines of reserve currency empires. So I needed to go back far enough that I would have a few. So I had to go back 500 years so I could see the rise and decline of the Dutch Empire and its reserve currency, the rise and decline of the British Empire and its reserve currency, the rise and beginning of decline for the United States and its reserve currency, and China. And so those are the forces, and that's what I did, which you're referring to. And that, by the way, that's available for anybody to read on LinkedIn.
So to recap, it's the high levels of debt, extremely low interest rates, the large wealth gaps and political divisions, and the rising world power, which was China versus this kind of overextended power being the US. And I just heard you say, Ray, in that thesis there, that you said this was the most analogous to the 1930, 1945 time period. Of course, if we go back in history, we understand what happened. And that sounds really concerning.
Well, it is really concerning. And it's even more concerning when I went back to find the 500 years and the times that repeated over and over again. And what I found was there's a cycle. There's a big cycle. You know, you start a new world order. In 1945, we began a world order after the war They decided how the world would be divided. They created the dollar as the world's reserve currency and so on. And then because there's so much fighting and then you've established a power that is a dominant power, you have a period of peace and prosperity. And then that gets extrapolated and it leads to more debt. Fear of bad times diminishes. Opportunities of borrowing and getting in debt, particularly if you have a reserve currency, because the world wants to save in that reserve currency. And that gets the country deeper and deeper in debt. And so you have those debt increases and you have bubbles, but you have prosperity. And bubbles are really fun. They're really enjoyable. They're great. But then you get to the point that there is a limitation to that. And those limitations become apparent when the central bank can't easily produce money and credit. That starts when you hit zero interest rates, because then you can't do it the same. Okay, then you go to that's monetary policy one is interest rate monetary policy. When that doesn't work anymore, you go to the next type of monetary policy, which is printing money and buying financial assets. But that purchases of financial assets and other things widen the wealth gap, because those who have financial assets do better than those who don't have financial assets, and you have a wider and wider wealth gap. And when you have that wider wealth gap, and then you have another downturn in an economy, that's a formula for a lot of conflict. And so that's what we see. So what does a central bank then do? If it taxes, it takes money out of the economy. That's not good. It's a problem. Mm-hmm. And if it cuts expenses, that's a problem. So the central bank always, through history, this goes back literally thousands of years, the central bank or the entity that controls money then prints more money. Because think of it, we got all those checks in the mail, and we needed to get all those checks in the mail, but you can't take it away from anybody. So where does it come from, and what are the implications? So that happens for logical reasons. And it often happens at the same time as there's a rising power externally as a competitor, which is a challenge in that environment. So yes, it's one of those times. And I think people are not aware of it, because I learned from my experiences that many things that happened in my lifetime that surprised me never happened in my lifetime before, but they happened many times before and in history. And that if I would go back in history, I could see that. The first time that happened was in 1971. I was clerking on the floor of the New York Stock Exchange, and Richard Nixon gets in front of the camera and says, "We're not going to give you the gold," and devalues the dollar. And I walked on the floor of the stock exchange. I figured there was a big crisis. And I walked on the floor of the stock exchange, and the stock market was up 4%, which was the most in a couple of decades. And I said, wow, that's surprising. And then I found out that Roosevelt did the exact same thing on March 5th, 1933. And what was done in those two times is the same thing that was done on April 9th of this year, when the federal government and the Federal Reserve decided to produce a lot more money and credit. So yes, you need these perspectives, and I want to pass that along, which is why I'm passing along that research on the LinkedIn piece.
Yeah, and it's always interesting, especially when you mentioned a mistake that 1971 on the floor of the stock exchange, what you thought was happening or going to happen, and it didn't. So you looked back in history and did this deep study. A couple of things I'd like to kind of double click on here, Ray. Monetary policy, you were just talking about monetary policy 1, monetary policy 2. And, when you think about what's happened, first you had the low interest rates. You couldn't go any lower. So then you had to purchase the financial assets. You mentioned it benefits the wealthier, because they own the stocks. So I guess, are we exacerbating wealth inequality here? And do we need a rethink of monetary policy that's more targeted, that actually can help stimulate those who really need it?
Well, that's what monetary policy 3 is. So monetary policy 1 is interest rate based. Monetary policy 2 is the classic quantitative easing. Federal Reserve buys or central banks buy financial assets. Monetary policy 3, which is now what we are seeing and what is needed, is the production of that debt through government borrowing and the government direction of those checks to those who need it most. That's what we just saw. And that being then monetized by the central banks. And so we're in a new era, okay, of monetary policy 3, as I call it. Monetary policy 3 will mean that the free market will play a much less role in determining those capital market flows, that the government, as we come into the future, will be thinking, how do I get that money to those who need it the most? So it'll be a highly political decision, much more political than it was in the past, and that the central bank then will monetize those political decisions. So monetary policy 3 means there's that type of cooperation. So those are the two dimensions of the big change environment. You're going to see much more government influence and direction of where money goes, which will have a big impact on not only the economy, but of markets. You have to watch what they're going to spend their money on, and they have to watch where they're going to get their money from, what taxes and so on means. The government will play a bigger role. And it also means that there'll be much more debt that is monetized. And that has implications for the value of financial assets. It has implications for the value of the currencies and so on.
Let's unpack that further, the monetization of the debt and what the implications could be. I mean, you're talking about, of course, when we think about the US, we have the world's reserve currency. That sounds like that status is very much, I guess, is it under threat here? Is that what you're essentially saying?
Yes. If you look at those arcs, there are many characteristics of those, but when you get to the end of the arc, if money is hard, when it was connected to gold or it was gold, they always broke that link. And if it was soft, they would always print more money. And you can't raise living standards by printing more money. You can redistribute it. Certainly the money that is being received by those in the form of checks and they go out and spend it helps their living standards. But what it does is it diminishes the value of that cash, and it diminishes the value of bonds, because bonds are a promise to receive a lot of currency. And it shifts wealth to financial assets. It always sends stocks higher, like my 1971 lesson. It always sends gold higher. And it also always shifts the impact of currency. So when we're looking at this, we're going to also see, I think, the rise of the increased importance of China's renminbi as a currency. It's got a long way to go before it's going to be a reserve currency. But I think that one of the important things to see is that you're going to see favorable capital flows for China. And if you do a comparison of their markets, where their interest rates are, where their capital markets, who's doing IPOs, nearly half of the IPOs, depending, we'll find out, but something like 45% of the IPOs there will be done in China's markets, Shanghai and Hong Kong this year, new offerings. That'll drive and more you're going to see the internationalization of the renminbi. You're going to see capital flows move in those directions. And those kind of analogous movements have repeated through history.
And then I guess tying it back to, the investors who are watching, a lot of retail investors, a lot of folks who are my generation as well, how should they be thinking about this? It sounds like, the kind of, I guess the outperformance that we've seen in the US stock market for so long, they need to kind of think beyond the US. Is that what I'm also hearing?
Well, I think first, the most important thing is to realize first, cash is a risky asset. I think so many people think if I go to cash, I'm going to be safe because it's much less volatile. But please realize in this environment of producing a lot more cash, the real returns go down. It's a seductive risky asset because, let's say, relative to inflation, you might get taxed 2% a year. And as you're taxed 2% a year, that's a huge amount of money over time, but it's a subtle tax. So first, watch that. Think about, okay, currency issue or the value of money issue. Then in terms of that, yes, you want to diversify to storeholds of wealth. And the second big thing is diversify well. Diversify well into diversify of asset classes, but diversify of countries, diversify currencies. So think about diversification. If you diversify well, you lower your risk without lowering your expected returns, if you know how to do that well. But I would say, what are the three main things? I don't know. Diversify, 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 I would say. So I would say those would be kind of the main headlines that I'd like to pass.
Mm-hmm. And of course, we're heading into an election in just a matter of days, and you have to wonder some of the themes that we've talked about here, whether it's the wealth gaps, the political gaps, the populists on the left and the right. How do you think about the election and I guess the scenarios, the probabilities, and how that might play into some of these bigger themes that we have talked about earlier?
Well, first of all, I think what is the most important thing for the United States? And I think the most important thing of the United States is to do the fundamental things right. We'll talk about that in a second. And also to come together. I'm most concerned about one side trying to beat the other side and doing damage, because history has shown that when you get those gaps, those wealth gaps and the values gaps and anger, you do get demonstrations, you do get violence, and you can move to the point that the respect for the system is not good. I have a principle, which is when the causes that people are behind are more important to them than the system is in jeopardy. So the bring it together and making sure that we can do that, I think, is of paramount importance. Then what are the fundamentals? The fundamentals, there's so many important fundamentals, but let me go through the important ones. Are you going to earn more than you spend so that you're going to build, we as a country, are we going to earn more than we spend so that we build our balance sheets? That's important for every individual, for every company, for every organization, and for every government. You can judge the financial health by those things. Then you have to go to the fundamentals that produce those things. And they start with educating your children well, broad-based, I think, broad-based, good public education, and civility. When I say education, I don't just mean, do you know how to read and write and all of those things? That's very important, of course, but also to behave civilly with each other, because societies that row in the same direction with a common mission, like an American dream, work better. And so I believe it starts with education and the basics, basically. Not what I was lucky to have. I went to a public school. I had parents who cared for me, loved me, and taught me some values. And so much. Those things are the most important fundamentals. Save more than, those things. If we can do that, that will be the most important thing, because wherever we are in relation to China or any place is going to be dependent on how we are with ourselves to do those fundamental things correctly.
You wrote the book Principles, and it's a fascinating read. You're talking about radical transparency, thoughtful disagreement, all these different principles. And we're just having this conversation about, how we are with each other and civility, bringing back civility. Are you optimistic that we can get there?
I'm not optimistic that we can get there, but I do know that we can get there if people are fearful of the consequences of not getting there. I believe that if you study history and you see what civil wars can be like, and you realize that you could have a civil war, don't take it for granted that you don't, and you see that when people put winning and getting their way above all else so that they will distort truth, that they will cheat rules, and that they will be violent with each other because that winning is of paramount importance, that the whole suffers greatly and it affects everybody adversely. So, I do think we're in a mindset in which everybody, not everybody, but I think the greatest problem of our time is people are passionately attached to their opinions, and are not able as well to go through the thoughtful disagreement of how to get past those disagreements and do things well together.
I want to talk about capitalism as well. And I know, Ray, you've done a deep dive on this. You did a study on this not too long ago. And it also ties back to education, which I know you and your wife are intimately involved in the state of Connecticut, which if you look at that state has a wealth gap as well. How would you diagnose the current state of capitalism? Is it broken?
Yeah, the piece you're referring to, which is available on LinkedIn if anybody wants it, is why and how capitalism needs to be reformed. It's kind of simple. What are your goals? And is the system achieving the goals? I don't know that we could agree on our goals, but I would say the American dream, as I grew up and really believed in and benefited from, was the idea of equal opportunity. And in doing that, you would draw upon the greatest percentage of the population so that you would find out where the talents lie everywhere. And also the people would believe the system is fair. And so I believe when I look at that, I think the system is broken. I believe in capitalism, but the nature of capitalism in various ways can produce these disparities that has to be dealt with. So education is a good example. As you point out, my wife and I, and particularly my wife, sees kids can't have the most basic educational needs pervasively. Okay, let me give you the picture in Connecticut. Connecticut is the richest state in the country, and it has the largest wealth gap, and wealth is concentrated in a small percentage of the population relative to the whole. 22% of the high school students in Connecticut are either disengaged or disconnected. Disengaged means that they have an absentee rate which is greater than 25% and they're failing their classes. Or disconnected means they don't come to school, they're out of school, they don't know where they are. 22% of the high school students. Where are those high school students going to be like? What kind of citizens are they going to be? Are they going to be net contributors, or are they not going to be a net deficit? And is that fair? Okay. Education. We were in a situation where COVID makes clear that they didn't have computers. So we had to, and the state didn't have the money for buying the computers. So we had to buy 60,000 computers for kids who didn't have computers, and they don't have connectivity. Okay. But there's poverty, there's food as an issue in that kind of environment. So it's not an environment of equal opportunity. Now, why does that exist? And there are not bad people who are producing it, but the profit system is not good enough to be able to allocate resources that way. In other words, not everything's going to be able to be achieved by profit. For example, profit pursuit is logically and for the efficiency of the whole system going to replace people in jobs. And so it contributes to the wealth gap. It's smart for a company to have a technology that's going to replace people in jobs, but you get to a smaller and smaller percentage of the population that makes that technology and benefits it, and it produces that wider wealth gap. So that wider wealth gap also is an unjust system. What I found is that the top 40%, because I broke it into quintiles, top 20, each 20, and top 40% of the population on average spends 5 times as much money on their children's education than those in the bottom 60%. In other words, the majority of people has this, the elites spending 5 times as much money on their kids' education. The elites and the people below want to take good care of their kids. They're not doing a bad thing, but that perpetuates an opportunity gap. So those structural reasons, not any bad guys, but those structural reasons are leading to a result that I don't think, that is either fair or that we want, because we're not tapping that talent. And it could lead to a civil war or, some kind of revolution of sorts. So it has to be dealt with.
And you have to wonder, too, how the states are faring through the pandemic, too, when you're thinking about just the public education system and funding those things. How do you think that kind of exacerbates the problem? And what should be done? Do we need more government to step in here? Do we need the private sector to step up? Do we need more philanthropists to adopt the local public schools? What do you think needs to change?
Before I get to what I think to change, I want to build on your point of what is. And what is in a lot of places, and it's ironic, in the richest states, they have the most debt and they have the largest wealth gaps. So this is true not only in Connecticut, New York, New Jersey, Illinois, and a number of places. And that produces a dynamic that has been, everybody sees it's true over time. You can't raise taxes because people will leave and too much a burden. And you can't lower spending because it's inhumane for those other people. And when you have a large debt and you have a large wealth gap and you have a downturn, you have a conflict. You've got a real problem. The United States as a whole has that issue, but the Federal Reserve bridges the gap by buying the money, but printing the money and buying that gap, buying that debt. I think at the end of the day, the question will have to arise, will they have to do it? How will that question be dealt with? Because it, at the state level or the local level, because it exemplifies what happens when the debt can't be purchased. And then, so I think we're in an era of a lot of monetization. Unfortunately, these all reach a point where it's an intolerable crisis. And then extraordinary measures come. And so I think that the path will look something like that.
So what does that mean for my generation? I'm a millennial. My generation, I guess we're becoming the parents of today, and younger generations, we're going to be the ones that have to really deal with the consequences here. What do you think the world looks like that we ultimately inherit?
Well, again, I think you have to be savvy of what that whole cycle is like. That's one of the reasons I wrote that LinkedIn piece. So the changing world order on LinkedIn, if you see it, because otherwise you'll be surprised by it, I think. But I would say when you're looking at that, it comes back to the same fundamentals. Educate your children well. Teach them self-discipline, character, civility, those things, to be strong. Teach them then to be open-minded, to go to read history or to hear from other people. Teach them to be strong. Those are the things that you can give. And yeah, don't be naive. Don't be blind to think that just the experiences that you've had are all you need. The future will be very different than your past. because of the way these things go in cycles. The funny thing, I think most everybody expects the future to be a modified version of the present, or what they've recently experienced. And more often than not, it's more the opposite than similar. In fact, if you take every decade, the 1920s, the 30s were the opposite. 1930s, the 40s were the opposite, more opposite than similar. And you take every decade, and it's more opposites than similar. So open the mind to that. Strong character, well-educated, those are the things at the end of the day that will serve you well.
Mm-hmm. You know, I just want to read something that you wrote because it stayed with me. You said, quote, "We are like ants preoccupied with our jobs of carrying crumbs in our minuscule lifetimes instead of having broader perspectives of big picture patterns and cycles, the important interrelated things driving them, and where we are within the cycles and what's likely to transpire." And of course, I think later in the piece, you even said that you're even just beginning to put together the crumbs, the picture here, and you don't have all the answers, of course, and no one really does. But I guess kind of to round it out here, what do you say? I guess you were kind of outlining what our world might look like, but if you could narrow it down to one thing, what would be the biggest issue that we need to tackle first?
Well, of course, the biggest issue goes back to one's approach to life. It depends at what level you want me to answer the question. But the biggest issue is be radically open-minded. You have to make your own decisions, and you have to make them well by taking in well, not by being closed-minded, and having the character to do it, and then going back and understanding histories and how the patterns of histories, and then take in from the people around you, the smartest people you know, the information, and triangulate with them well to make that decision. That is, I would say, the overarching at any time, the most important things anybody could do. As for now, I would say to realize that these changes take a global view, make comparisons of countries, put things in perspective. And then if I narrow down to investing, so I'm getting more specific in answering your question, it would be first to realize that cash is not a safe investment. It's a very risky investment, and know how to diversify well. And when I mean diversify well, I mean diversify globally, in countries, in markets, and in currencies.
Mm-hmm. How about, do you have a take on digital currencies? This is something a lot of young people talk about. Any view on that?
Digital currencies, let me break them down into two types. There's the type in which it's like a Bitcoin type of currency that'll be an alternative currency in terms of its supply, demand, and an alternative storehold of wealth. And then there's digital currencies. That means there'll be other types of currencies, let's say the dollar or the euro or the Chinese renminbi, that is digitalized. Okay, I think we're going to see a lot more of that second type. But I think that there are three main problems of the first type, the Bitcoin type of that. Theoretically, it's good, but the three basic things are a currency has to be an effective medium of exchange, storehold of wealth, and the governments want to control it. So I today can't take my Bitcoin yet and go buy things easily with it. And as a storehold of wealth, it's so volatile that its volatility based on speculation is so much greater that it's not an effective storehold of wealth. And which is also one of the reasons it's a problem to be a transaction vehicle, because if a vendor says I'm going to get paid in Bitcoin and they don't know what that means in terms of their other liabilities, that's a problem. And then thirdly, governments won't, and if it becomes material, governments won't allow it. I mean, they'll outlaw it, and they'll use whatever teeth they have to enforce that. They would say, okay, you can't transact in Bitcoin, you can't have a Bitcoin. So then you have to sort of be almost like is it a felony and I'm going to have to be a felon in order to transact? They outlawed gold. What's wrong with gold? But gold was a storehold of wealth. And so if I was to say, what would I prefer, Bitcoin to gold? No, I wouldn't prefer Bitcoin to gold. Gold is will be the vehicle. There's either that central banks and countries use as an alternative to the regular cash, because each central bank can print cash. But through time, when countries dealt with each other, they used gold because they didn't have to worry about being devalued by some country that's going to print the gold. And so it still is our third largest reserves, if you take central bank reserves. The largest is the dollar, the second largest is euros, and the third largest is gold. So, so if I'm dealing with classic currencies, I'm really started getting into the storehold of wealth domain. That also includes stocks in that storehold of wealth. But I don't think digital currencies will succeed in the way people hope they would for those reasons.
Really interesting insights. And of course, I would recommend folks read The Changing World Order by you, Ray. And if you have any book recommendations, feel free to pass those along as well. Thank you so much for your time.
Thank you, Julie.